Welcome to the Stock Up with Larry Jones show. I'm Stocks with Josh. I'm filling in for him today, and I want to come and talk to you guys about what's going on. It's Friday. We're getting ready to go next week into the holiday Christmas week, and I want to point out something very important to you guys that I've been observing in this week. Even though we've been coming down a little bit, it's more or less because Wall Street's taking a step back and getting ready to go into a vacation week. What I'm not seeing is hard selling, aggressive volume to the downside. So if we were going to get that, we would have got it this week. And so as we move into the close on Friday, unless this market absolutely falls apart in the last couple hours, Wall Street has spoken. 2025 is roughly settled. They're looking for higher highs in 2026. Now, we've moved up on the S&P 500, stacking green candles on the monthly time frame, one after the other. And ever since we made a pivot low and a pivot high in the month of October, ever since we got there, everything's been cooling off and moving sideways. And we've come off of those tops, but the week of Thanksgiving, when Wall Street was away eating turkey and relaxing, the stock market slowly climbed back up towards the top of the range. And that's referred to on Wall Street as climbing the wall of worry. It means that nobody loves stocks at these elevated prices, and they're not necessarily thrilled to be loading the boat, as some would say, and buying these high forward PE on Mag 7 stocks. But at the same time, they're not really selling either. We're still in an AI rally, and no, the bubble has not popped. And the view is that in the coming year, 2026, the expectation is a lot of the stocks that won in 2023, 24, and 25 will win again in 2026. The AI run is by no means over. Now, I've recently been hearing a lot of pundits talk about the 2026 year and what we could expect from it. I want to highlight that there are absolutely some concerns in 2026 that would lead us to imagine that we're going to have more volatility than normal. And it will set up for some pullbacks and an opportunity to buy the dip and make even a better return, which is actually something that a lot of people would love to see. They want to be buying. They just want a cheaper price for some of these stocks, and so do I. But the number one issue that we're going to face this year that I see at the moment is the midterm elections. Now, the average drawdown for a midterm election year, the average over the course of the last couple of decades has been 19%, okay? And so you've been hearing people talk about the fact that the market could pull down 20% in 2026. And I want to let you know, even though I just told you that the AI rally is alive and well, it doesn't mean that we're not going to stress test the run that we've enjoyed since 2023. We're likely going to do that. But the good news is that after a 19% pull down in the S&P 500, the rally after that has been greater than 34% on average. And so you want to get looking at these charts, start taking your favorite big tech plays that you want to load up and be ready for in 2026. You want to draw a line from the top to the bottom and identify where they could potentially go. Now, some of them are going to get there sooner. Okay. Some of them are going to take their time. They're going to lag the pullback, but very likely we are going to get a test on the S&P 500. It's going to set up for a buying opportunity. And if you can get into some of your favorite stocks and buy when others are fearful, that can be an opportunity for incredible gains in the days ahead. I love following Stock Up with Larry Jones. He always has his eye on some of the fastest growing momentum plays on Wall Street. He did it with the quantum stocks. And I can guarantee you that if you hit the like and subscribe on this page, he's going to give you those hot plays. He's going to tell you when it's time to nibble. And I promise you it'll be on a red day and nobody else will want to buy. And he's going to come out here against the grain and he's going to say, I'm buying some of these stocks, and folks are going to criticize and say, oh man, we're really going to go down. This is just the beginning of the bear move. But if you take a big step back, the fact is there is no big reason for the markets to go down. People will talk about credit crisis. They'll talk about inflation still not being under control. But the fact is, If you really stop and listen to what Fed Jerome Powell has been saying for quite a while, he said, I see the market is strong, and I've seen growth in the Mag 7 accelerating in 2025. No, we're not cooling off and rolling over as some would suspect. Now, the market will give us a pullback. It will give us an opportunity to buy. It will have 10, 12, and 20% corrections. But that's vastly different than the economy running into a downturn. Now, I want to give you guys a rule of thumb that would change that narrative and move us from a truly hot and accelerating and growing economy to an economy that's in trouble and expecting a much deeper pullback, something that could go as low as 30% or lower, which we've not seen in a while because we are right now at the threshold of thriving innovation. People are spending money, looking aggressively towards growth in the future. But here's what you would be looking for. You'd be looking for 2 full quarterly earnings from the Mag 7, which drives the AI story and drives growth. You'd be looking for 2 full quarters of misses. That's how Wall Street would decide if we were going into a recession. I don't see a recession. I see 2026 being a year where we could easily, because of increased volatility and uncertainty surrounding the midterm elections, I see that as a year in which we're going to get a stress test, but I see absolutely no reason for the economy to fall into a recession mode and go deeper than 20%. One final question, Josh, when will all of this pullback or potential 20% drawdown or stress test actually occur? I see that in a very specific window. First of all, I want to take you into the SPY, and I'm going to show you what a rollover and pullback typically looks like on a very high time frame like the monthly chart. And then we're going to compare that to where we're at. All right, let's go into the chart. All right, you're looking at monthly candles. And as I mentioned before, we're operating within this October candle still, which the pivot high and the pivot low has been operating as sort of the price range that we've been moving within. But ever since that October push higher after that huge run of 6 green monthly candles bringing us off of our April lows, we have been clearly going sideways. As we move towards the end of the year and the monthly candle closes out, it is closing out as a doji candle at the top of a move. That is sort of a bearish setup. So far, the October candle was very bullish, but since then, we've had 2 candles which clearly demonstrate that we have lost the steam of this upward move. Let's go back in time and look at how long it took for the markets to roll over. And we don't have to go very far. We can go right back to 2024. This candle right here is very similar to the October candle we have now. We had gotten it after a number of months of the market pushing higher. We went sideways for 3 months after that, staying within the range of that defining month until eventually, after we got this doji candle, we then had a 2-month pullback. So this actually took 1, 2, 3, 4, 5 months for the market to roll over. As it continued to climb and go sideways, it constantly retested the high, but never quite closed a monthly candle above it. And that's what we've gotten right here. Ever since October's defining monthly price range, we've been trading within that range. And the fact is that if this candle turns out to be a doji candle, similar to this doji candle, we might find that we get a pretty fast drop-off in January and February. So one of the things I want you to take away from this is when these downturns occur, they typically take time. We have not gotten above or beneath October's pivot low or pivot high, but eventually we're going to get that doji candle like I showed you, which we actually have right now. And it means that it would take even then an additional 2 months worth of price action to potentially hit a bottom. Now, I'm not predicting that. I'm just wanting you guys to understand that ever since we got into October, we have yet to break out. And if you go back to that previous period of time where it had been consolidating in 2024 before it eventually rolled over, it took all the way till April, quite a few months, for it to come down and hit the bottom. We're going to be watching it very carefully, and Larry's going to be giving you those buy signals when he begins to nibble at stocks that he knows are hot and will do well in 2026. What I don't want you to do is to get afraid of Wall Street and get afraid of the downturn, because the downturn in the middle of a very strong economy is only going to open up doors for making money in 2026. Hey, support Larry. He's taking care of his family right now. Hit the like, and if you're brand new to this page, hit the subscribe, because you're not going to want to miss out on his momentum plays in the next year. On an additional note, as you're getting ready to go into 2026 and you say, well, I don't want to put my money to risk. Take some time to learn a little bit. Larry's got one of the most comprehensive classes on Wall Street where he really begins at the foundational level and helps you build up from there. It's not just stocks, it's stocks and crypto. Check out his course on Stock Up You. Invest in yourself, get the class, and get positioned for 2026. I appreciate you guys joining me today. I'll see you in the next video.